Hello and welcome to Options Guide TV. My name is Brian Overby. I'm the author of the Options Playbook. And, 2026, I'm going to be the portfolio manager of our deep in the money option contracts. So we're going to add to our position and then we're going to hit earnings season next week. We did put on an earnings play on one of the first companies major companies that will be announcing earnings, and that's JP Morgan. And so we're going to start by looking at our positions inside the paper trading platform of the Tradier Pro software. So let's do that. Let's take a quick peek at it. We see FedEx here trading at $43. We got JP Morgan trading at our option contract is at $43. FedEx, we're going all the way out to the June 16th expiration. We do have earnings coming up and JP Morgan, which is next week. And we're going out the same expiration. And in NVIDIA, we're going out the same expiration. Now, I do plan to add another AI stock, but I want to start by looking at a consumer stock at this point in time, Walmart. That's simple. So I'm trying to stick with stocks that are in fairly close price range that are going to cost us about the same in the options marketplace. We're going to try to put this portfolio together. Some option contracts, if they're less than this because of the price of the underlying stock, we might buy two of them. But we want to allocate about the same amount of capital across all of our positions to start with in 2026. So let's go to the options grid. We're going to pull up Walmart. And once again, we are in the paper trading portfolio, so we will execute these trades. Now, Walmart is a little bit frothy. I mean, it's frothy when you consider that it's a retailer and you're comparing it to AI stocks, and it still sometimes trades at higher valuations than stocks like NVIDIA. Right now, the actual PE, just by going to the Walmart chart here inside the platform, is 43 times earnings, where NVIDIA is probably close on the actual PE. 49 times earnings. So they're being valued in the same realm, I guess you will, but strong management. And I think that is one of the biggest things that we're looking at. They didn't just lay down and let Amazon take away all the retail business online. They've made a very good move, especially over the holidays. They did very well on their online platform. They have a competitor to Amazon Prime. They actually discounted it 50% over the holidays, and they had a lot of takers on that. And then they have the benefit of Walmart's are near. So the ability to get something shipped that day and actually delivered that day. They've made a lot of moves in that space. And I do think that they'll continue to grab market share, or at least maintain the online presence. And then they're doing extremely well in the food space. They're have become a grocer. They're one of the biggest grocery stores now at this point in time, with all the moves that they've made in that space. So they're embracing AI. They're doing just a lot of good things. So I want to get long Walmart on this little dip that we had. We came down to this level. This was actually a really good buying opportunity right around the 200-day moving average. The 200-day moving average has held strong throughout on the Walmart pay on this nice move up. The only thing, we are just a little frothy, but then again, they're a low cost leader as far as retail is concerned. And so even in a downturn, they are a little bit of a safety stock. And then we're going to look at another safety stock in that I've been talking about for quite some time, UNH. And that's going to be our two major trades for the day. And we're going to come back, look at our portfolio, reevaluate, see where our capital is at on Monday morning. And then we're going to get ready to do some earning trades. So we'll go back to a little bit more of our speculation trades on these positions. So hanging out, the 50-day and the 20-day have been dancing along the way. But as of right now, we have a solid market in that. We got the 200-day, with the 50-day right above it and then the 20-day above it. And we've got this little breakout. This is obviously an important area, looking to try to set a new high up here at the 117 level. But what do we got? We got about 1 month, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, about a half a month of consolidation, trying to figure out where it's going to go next. And I think the path of least resistance is going to be the upside at this point in time. So let's go back. We have big news on tariffs. Well, the Supreme Court did a head fake this morning, in that they announced that they're going to have an announcement that they're going to have a ruling, but Marketplace was anticipating it was going to be the rulings on tariffs, and I guess it wasn't. They didn't even say what was announced this morning. They just said that it was not about the tariffs, and if the president has the authority to assign all the tariffs that they have assigned so far. And a lot like stocks like Nike got beaten up because of their exposure to tariffs and everything that they've been. Lululemon is also, if you're looking to bottom fish, I actually thought about Lululemon today, LULU, trading at around 14 times earnings, but that stock has also been beaten up, and tariffs have a little bit something to do with that. But let's hang with Walmart. I digress. Going back, options grid. We're going to look at the same June expiration, 160 days out. Go down to the 80 delta. So on this option contract, yeah, we're solid. 10%. Gotta grab my calculator. So we're going to be looking at vols are 20%. Even going this far out to June, we're still at a 25% vol. So this is relatively inexpensive compared to a stock like Nvidia, and we're probably gonna let's buy one today, but we're looking at about half the cost, and we want to make about we want to start with a portfolio that's pretty diversified. It's $114 stock too. I guess I didn't really think about it that way. So let's buy two of them. I like the 100 strike. That's kind of nice, right? That's not cool. 105, 115. That gives us 10 points of downside before we kick in. Let's go look at the chart here. Yeah, 105 is down here. Means it would have to break below the 200-day to get there, or the 50-day to get there. 200 days down around 100. All right, let's do it. It's right at 80. 79 delta, and we're going to buy two of them. And why are we buying two of them? Well, if we go back and we look at our portfolio, the cost of all these individual options were right around $43. If we buy two option contracts at $15, we're going to be at pretty close to $30. Now, I don't want to buy all three. If anything, if I know I'm going to buy more of one position, I usually like to buy one, see where the market goes, and then buy another one, dollar cost average into the position. Here we're starting too far behind. So we're going to do two contracts of it, allocate $3,000 to the position. It'll be about $30 to put this trade on. Midpoint is 427. Once again, dealing with these bigger, longer dated in the money option contracts, this is 5,000 open interest. That's not horrible, but the market isn't great, and you get zero representation inside the paper trading platform. So I'll throw it in at 15 to start, and we'll just make sure it executes before the end of the trade or before the end of the show. And this is going to be our order. We're going to buy two of the 105 strike calls with the June 18th expiration. I'm pretty sure I want to make sure that is the right expiration. Yep. I want to keep everything the same as much as we can. Once we get into the portfolio, dates might change based off of movements and reallocating of funds. But I like to try to start with the same expiration dates. I don't mind if they get mixed up in the end. And we're going to buy two of these 15, and I'm going to send this to the market. Here we go. Looks like I'm froze for a second here. There we go. There's the send button. All right, I'm not moving. So give me 2 seconds here. Yeah, I'm definitely froze. Okay, so the next one, okay, we move, but I should be able to hit send. One more time. I feel like there's something somewhere that's stopping this from being sent. All right, well, I'll come back and I'll work on that trade. Let's see if we, for some reason, the paper trading platform is not sending the order. Even though it's showing me that it's sending it, it's not sending it. Let's go back to the options grid. Let's look at UNH. We're going to trudge forward. I'm going to make sure this gets filled. If we got to fill it at 1520, we will. This is where I would probably target it if I'm trying to get this order off. I might start at 1475, 1480, a little bit below, because there's quite a big, there's a $1 gap in the middle here. 175 would give you half of that gap. So 1475 would probably be in the real marketplace where I try to fill. We're probably going to have to fill closer to the 1520 because it's a paper trading portfolio. All right, let's go back. Let's just try switching up and coming back to Walmart again. Go, send it. All right, let's look at the UNH trade. So UNH, I've liked it for quite some time, and the stock has just kind of meandered. And now we've actually seen some strength in healthcare and just on the chart in UNH. Always been focusing on this gap. We wrote it up to the gap, wrote it back down. Let's keep the gap in play on our chart when we look at it here. And going back, we see the 200-day moving average broke out above it. And now there's a little bit of a period of consolidation right around the 200-day moving average. So if we can break through that, I do think the next stopping point is right about here, 363, or the area of resistance to the upside. It obviously can go lower, but right in here is going to be an area of congestion based off of looking at that chart. And then we go all the way back to the top of the channel again at 381. Don't think it's a bad time to be doing it. Earnings aren't that far away on the 27th. So I'd like to get into this position before that earnings date. And here's UNH. Let's hope that we can do the June expiration again. Good. They have the same expiration, June 18th. So sometimes if you get into longer dated options, that expiration might not be offered also. Right now, so far, all the options that we've done have the June 18th expiration, but they don't have, there could be a possibility that expiration is not available to you, but no big deal. You just move to a different one. I like it. So right at the 80 delta, where we see the most open interest, almost 4,000 contracts. Market is tough once again. So we're looking at 61.20. So this is a fairly expensive option contract. This is $20 more than our NVIDIA and other positions. Got $16 of intrinsic value, $21 more. And let's buy it. Let's do it anyways. Here we go. A little bit more than I wanted to spend, but it's a $344 stock. But see, it's trading at 35 vol. That's the issue, and that's the earnings that is probably hitting us. 29 here. the shorter term option, this one's trading at 30 vol, but the historical vol is around 39, and it says 35. Not bad. All right, let's do it. Market's $60.53, 61.20 on the upside. If I'm trying to buy this, 61 is about right. Let's just see if we can get the order sent at 61. That's about where I would put it at in the real world too. And hopefully we send. And no, we not. Okay. So I can't execute either of these two trades, but that's going to be our two trades. I'm going to make sure that they get into the paper trading portfolio. We're going to do a trade on a deep in the money call option in Walmart, and we're going to do a deep in the money call option on United Healthcare. And then we're kind of rounding off our portfolio as we head into the earnings season. That's going to start next quarter. And FedEx, JP Morgan, NVIDIA. I might look at I might look at a couple more in the AI space, maybe an energy company too. And we probably need to get at least one energy company inside our portfolio to go along with. We got Staples, we got FedEx, we got industrials, consumer staples, and healthcare. Not bad. All right. I just wish I could send it. Sorry about that. Error occurred. I finally got an error. Any questions or comments? And I don't see anything in the chat box. Short session. We'll be back on Monday. Get ready for earnings. And see you this Monday for the next edition of Options Guide TV, 11 a.m. Hope to see you in the hub.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.